Okay, so it's recording. I'll drop the link for it when it's done. It'll probably take a minute because I'm going to throw it on my YouTube, and that takes a little bit to do so I can delete it out of the cloud. Okay. So again, supply. Yeah, you can watch it from my YouTube. So supply and demand is, again, it's an area, and you can see on the chart that these would represent more of an area. That's why you should kind of use boxes versus a line when you're looking for supply and demand, because it gives you like a range of where price is likely to reject from, right? Support, supply. Sorry about that. Support and resistance. It shows up throughout the chart in everywhere, right? You can see support and resistance somewhere in here, right? This little area has support and resistance, right? Let me box that off. This has support and resistance in between here, right? And if we look at it, it's at a certain price, that we get support and resistance right here. But is this a supply and demand zone? Not really, not really. So, and the difference between that is we don't have any major rejections over here as we do over here, right? And viewing it from the higher time frame, right? Let's look at it from the daily, right? Same area from the daily, right? If we look at this from the daily, where I have my boxes, you can see that there is a major area of rejection here and major area of rejection here around this area, even creating some new areas right here. Price created a range of rejection, and not so much at a particular price. Can you find a price in that range that it really responded to well? Yeah. This was the number for me given at that particular time. Let me delete you. This was the number given at that particular time, right? That I used to take this, to send out a trade for this, right? But your support and resistance could happen in between here, right? When there's actually no, this is near a zone, this is near a zone, this is near a zone, and we do have support and resistance here. But overall, the concept between those two is more so that supply and demand is an area, support and resistance is closer related to a price. And you can see support and resistance more frequently than you do the supply and demand zones, right? And I also showed you guys a way that you can quickly find your supply and demand zones given the time frame that you're on, right? So if I want to know where the supply and demand zone on the hour is, you can drop your Fib retracements, right? Your Fibs and the Fibs, what we got? Retracement. What's going on? What am I doing? Oh, my bad. Your Fib retracement tool, right? And I'll give you my numbers for this, right? And people use Fibs differently. There are a couple ways you can use, but the way that I use them and the way that I was taught and learned, shout out to Orrin Wright, who gave me this, who taught this info. Your supply and demand zones lie in between the 886 and the 100, and then the 12.5 and the 0 on your Fibs, right? And let me share you guys my parameters for this. So my 0, something you can leave the default values in on your fib retracement, but you'll need to add in 0.0886 and 0.886 and 0.125. I like to change the color, so I would recommend that as well on each one of those particular levels. And then scroll down to where it says levels, and then change the value, because I think it defaults to value, and then add percent. When I also, I always draw my fibs from, you know, top to bottom or bottom to top. And basically I'm looking for wherever this move started. So I'm adding this to where the wick is here and where the wick is there at the bottom of this move, right? And so some people, they place it on the body versus the wick. That's kind of up to you. You'll still get the same information though, right? Unless there is like a huge wick that like just maybe because of news, it just wicked all the way up, but it doesn't really consider where the price actually is mainly functioning at. So that's the only time I wouldn't consider it, right? And so right now, here, that quick way to determine where the supply and demand is here, right? So I have my supply zone right here from this area to this area at 886. I have my demand zone, this area and this area. And this is a supply and demand zone from the 1 hour time frame, right? But in between this, I have my retracement zone as well, right? And my retracement zone lies in between 61.8 and 382, right? And this area is where, you know, you can do a lot of things with this area, right? If, in our case, right, this move breaks down and we're looking for an area where it is, the probability is higher that it should retrace to, once we see that this move happened, right, and we got our supply and demand zone right here, and we got our retracement zone, right? Once we know where our retracement zone, and we see we in a downtrend, if we wanted to consider taking this trade as if it was a continuation, we could expect for this move to happen, this move to happen. This is our pullback in this move, and then we can expect for this to break out from here, right? If this was to continue, you know, and you can look through past data and see that same reaction, right? So with that information, right, we can take this and use this to set up potential trades, because if we know, let me replay this for you, right? Once we see this happening, right, if we know that this is a retracement zone, right, where we'll get at least a 50% retracement or even more, right, we'll know by doing it. So let's watch this play out on the replay. We could set up a potential trade entry to continue to the downside from our retracement area right here. Like taking a trade from here. This would have been a good trade, right? Let me pause this. Let me pause this, right? So pause this right here, right? So as we enter this rejection zone right here, right, we can look to enter a trade from here, right? And if we on the lower time frame, this is the 1 hour, If we're on a lower time frame, we are likely to get an entry somewhere around here, right? And if you want to be aggressive, you could have took a potential entry down here as well, right? Because this is the first time that it rejected this area, which we would have expected because we got our first attempt to push back up. We could have took a trade from here, but the actual trade that you want to wait for is to take this one down, and you would have taken this down, and this, you know, from high as possible to low as possible is 100 pips, right? And then, you know, you also know where, if it comes down, using supply and demand, right? We had a supply zone created, we had a demand zone created, and we had a rejection zone created. So we can use this also to our advantage because now we know around what zone or around what area we should get price to reject or have trouble breaking through this zone right here, right? This demand zone, right? And if it is going to, if you see it struggling right here, this is the first area you want to start consider taking a TP, right? For this trade, right? And you would have this mapped out for you ahead of time. So if we continue to play, right? And we see it rejected off of the zone, but it pushed through. Eventually, it pushes through our rejection zone, right? And another price level to consider is the 786. That's around this area, right? Too. That's your last. The 786 is the last hope. You know, if this is going to reject and continue back down, if it can't hold 786 on the Fibs, then you gotta consider that it either reverses or it just isn't ready to push down, right? And so this one just kind of consolidated between the 786 and the rejection area. And I know I don't have the Fibs on still, but I promise you it's the 786 that this is rejecting from. Promise you that. Right? You can see it, right? Rejecting on the 786. And this would be the last hope for this to, this would have been like the last hope, you know, this would have been the last place you want to try to reject it and take it down right here. You got another trade set up that you could have entered once right here, that would have been 90 pips. Another one right here, that would have been 100 pips that you could take, you know, from a lower time frame if you start to see it rejected, right? And then finally, you know, if it does get back up, hang on, let me that person. I don't know who it is though. Hang on. Rob, what's up, man?
What's
How
up,
you
man?
doing? What's going on? I'm gonna mute you though. Mute you.
My bad. I didn't realize I was unmuted.
It's okay. Okay. So here, your last hope in this trade right here, and usually this is like a sign that it might, you might get a consolidation area, right? This is the supply zone. So if you see it come back up here, you also have another trade for it to reject near the supply zone, right? Okay. So if we continue on into this, this movement, let me speed it up a little bit. Speed it up a little bit to get where we are, right? Right here. This is our first attempt to break the supply. I mean, the break this demand level, right? I actually gave this trade out on one of our London sessions. I think it was Wednesday or whatever day this was, we gave this trade out on GA on our live call, and it broke, and it continued to try to hang around here. But you can see all this price right now is reacting to this demand zone and attempting to turn this into a supply zone. So anytime you got a supply zone or a demand zone, they will attempt to flip-flop, right? The price will attempt to take this demand zone and turn that into a supply zone at some point. So we'll look for the larger moves, right? Just looking for the larger move. And now we're kind of in a consolidation area, right? We're in between this little area right here and here, consolidating, attempting for it to break out, right? So that's the approach you want to take. And like I mentioned before, you have support and resistance in between here, right here, this little level right here, this little level right here, but it's reacting to the bigger picture. It's reacting to the bigger zone versus versus an actual price itself. And then another way to consider it is always switch over to the line chart, right? Switch over to the line chart. You see your supply and demand a little easier, right? Here is my supply. Here is my demand. And in this area right here, I can see major rejection. They're trying to hold this, and it's not correlating to a particular price. Here is my rejection area right here. And it's not so much that it's a price, but a actual zone, right? And when you look at it, right, my rejection area, if I take a line and I add a line from the line chart, the reason why people consider the prices when they take in consideration supply and demand and support and resistance is because you see, always look for these little knives, right? Let me delete this off of here. Especially when you're like new trading, always look on the line chart for where you see a knife. And I call this little point or V right here a knife, because this gives you around where price is going to likely create a key level or zone or whatnot, right? Right around these type of levels right here. So when you look across, you see there's a point, a V right here, a V, mostly a V right here, a V, a V, a V right here. That's where you get those significant moves from, right? Even right here, you got a V near the demand zone, right? Another V, right? This didn't touch it on the line chart, but you still consider it, because if we switch over back to the candles, it's probably a wick right there, right? Everywhere you see these V's is probably a wick, right? So we know that because of this, because of that, you know, it gives us a higher probability that there will be a move that we can consider from these areas, right? Either it's going to break the area or it's going to reject the area. Either it's going to break the area right here, or it reject this area right here and move back up in the opposite direction, right? So, to sum that point up, that's the basics of how you want to understand supply and demand. Once you do this, right, I don't always use supply and demand, you know, because I don't use the Fibs to get my supply and demand. But like once you started to notice these trends in the market, you'll automatically see that, okay, this area on the chart is a supply and demand. This one is a zone right here. This one is a supply and demand. This is a key rejection area right here. And you'll just start to see it. Like, it's weird because I've done it so much where I almost know how to read the Fibs without even throwing them on the chart, right? And that's where you want to get to. and you know, use that to help you measure out your moves. And I taught another session where I went over measuring your move. I won't go into it. It's a little kind of advanced, but basically, once you understand fibs, you can actually kind of, I won't say predict, but you can model, you can create a model of what future price would look like, you know, and where you can expect the move to go to, right? Um, I can't even talk about it without showing you guys. So let me show you. Just kind of show you right quick, right? So you have, like I said, what's called measure moves, right? This move right here is our major impulse, right? This move says, I created supply and demand zones right here. This move where this red line is, and let me make it a little thicker, right? This move right here, right? This move says I created the pullback, and I'm gonna label this one blue, right? I created a pullback from right here. Pullback right here. This completed the pullback, right? So how far could this next move be if I took this move, right? Let's grab this same move, right? And I'm gonna put it right here, right? When this moved down, look at where we had most of the move, right? This pair made almost exactly the same move that it did from here right over here, right? Almost to the T. Even gave you a few extra points, right? From here. Like we made this entire move from here. And when this works better when you're in a trending market, right? Even gave you an extra 20 pips. It gave you that move plus an extra 20 pips, right? That this works a lot more. This works even better when you're in a trending market. And when I refer to trending market, I'm referring to when you see the market doing this right here. When you see the market creating new higher highs and higher lows, that's when it's like even more powerful, right? Because that gives you the means to basically just tap, you know, just create the entire move. And I'll show you an example of one trade that I gave out on oil. Oil wasn't it wasn't necessarily trending, but even in consolidation, you can see these kind of things as well. You just have to look at them from a lower time frame, right? So oil, hang on, no, oil was not that. Oil was something else. Let me find a pair. Let me find one. Who is probably clean right now? Gold. Let's look at gold. Okay, so gold. Okay, cool. I see a nice example. This is gold, right? I'm gonna measure this move right here. Gold broke right here, right? Created a move down right here. And let's change you to red. Created a move up right here. Change it to blue. Let's use green. Let's use green on this one. That created a move up. Take this move, copy it up. Hang on, take this move, copy it. I have the majority of this move made right here. I've gotten somewhat of a prediction of what this move could be, right? This move stalled at, even this move right here, stalls at another supply zone, right? This supply zone was created off of this move right here. This move right here created this supply zone that I drew up right here. And it stopped right here. It also created a little consolidation area, and then it moved up from there. So we got another example right here. We got an impulse, a retracement, and another impulse. This goes into some other things that I teach regarding the Wyckoff and Elliott wave theory, but I won't go into that. Can I touch on the Fib extensions? This is exactly explaining that, right? The Fib extensions, right? They actually go into exactly what I just described, right? Your Fib extensions can help you measure where your impulse and retracements are going to be, right? So just let me show you. Let me reverse this, right? So if you look at this, right, where my move happened was from the 0 to the 100 or vice versa. This move, there is another level right here that I don't have added, but this would have been around where my extensions are right here. And I would have to, I got to remember what those are. I haven't traded with the actual numbers in a long time, but they basically give you, it's basically this repeated, right? It's basically the first 0 through 100 levels repeated from 100 to the next 200 level, right? Just think of it like that, right? So think of this as like the 138.2, level right here, because we already see that this is the 6-1, the 100, 618, the 150, and then you got your 138.2, right? And then you got a 102.3.6, right? That's where we are kind of around right now, right? That's basically the short, sweet version. That's basically what the extensions imply, right? And you can, the fibs extend forever, right? Because it like defines the overall market, and you just got to use the fibs as, a measuring tool. It just gives you a way to kind of measure where the move could be and how the move could look, if everything is in a trending market and it goes in the direction that it is essentially moving in, right? Job explaining. Thank you, Allison. Yeah, that was a good question. And yes, sir, field level. Exactly. Hector, y'all, this dude, Hector, he quiet. And I don't know why he is quiet as he is, but this dude trades with Fibs a lot, man. And he gets some nice entries. So if y'all, also want to catch some trades, and then another thing about Hector, he trades more FX pairs than I do. So he'll give out some stuff in one of my chats that you guys should probably be looking at if you like trading FX pairs. He always drops them in there. So if you see him dropping something, pay attention, because it's probably a good setup. And he uses his fibs and he uses RSI to find his entries. So shout out to Hector. Um,
Yeah, I usually just put key zones and rejection zones out there. So it's either gonna break or resist. So just keep an eye on it and keep an eye. What's the key on those is keep an eye on pairs. If pairs get strained or weakened, then you know it's gonna go in the direction where you see the market's going. You know.
mhm. Yeah, shout out to Hector, man. He is a quiet assassin. And so back to let's see. Let me actually give some setups, right? So oil. What's up, Mimi? What's going on? I didn't know you were on here. This lady trouble. What's up? What's up? So it man, oil was so beautiful, man. Oh my God. Let me talk about oil, right? Let me talk about oil. Oil I called out on a London session we did, right? And when I called it out, it was around here, you know, around here, right? And I saw that it created this little zone. Like actually, it was around here when I called it out, right? And this mapped out so well. It did way more. It did so well, you know, as far as how I had it marked up. And I'm gonna see if I can show you how I marked it up versus where it is right now. I think I dropped it in, I think, Aaron, I think you sent it back to me. I think you sent it to me because I asked for it because you were on that call. I just don't remember where we sent it.
You on a London session? Didn't let me know what the hell.
I got you. I got you.
No, next time I'll get on with you.
All right. Where did we drop that chart? Oil was beautiful, man.
Man, and I was watching oil too, and I missed it. I kept on waiting for it to break that zone. Where is that?
Yeah, man. Dang, I cannot find it. Let me see. Give me like 1 second, because I know you sent it to me, Aaron. Oh, yeah. I sent it to you too, man. Hold on. I sent it to you too. And you were all confused and fussing with me. Did I send that one though? Sorry about this. Nope. Nah, not that one. Sorry about that. Sorry about this. Where is that joint? It's in here somewhere. Maybe it's in this chat. Sorry about the delay. About the delay. I'm just trying to grab this. Okay, never mind. I can't find it. But anyway, this essentially, right, this created a little range, right? The little small range, right? And given that this is right before London session open, you know you'll have a reaction, right? You'll either have a breakout to this downside, where you'll have a sell opportunity from from down here to here, right? Because we know that when London opened up, we have more volatility in the market, right? So we know from this little area right here that we should have either a breakout or a push back up. And because we just pushed down in this little area, we kind of can expect for this to push back up, right? Also, we got to consider that over on the 4-hour chart, we've been consolidating in this huge range on the 4-hour chart, right? And the trades that I gave out on oil literally mapped the entire move that just happened all the way up to where it is current state, right? And whereas you had this breakout of this little consolidation. Let me go back to the 1 hour. Had a breakout of this consolidation right on this candle, a retest on this candle, a move and reject back up. The potential for it to drop back down from here was there, but we also had, if it played out, that it would break, reject right here, kind of move back down to this zone, even broke. You could have took a trade from here, broke back into this zone, and then the final portion of this move was to take the break out from here, and your target would have been right here. All the targets were mapped out. All of the zones were mapped out. And once you start, like I'm telling you guys, like the more effort you put in, the more work you put in, the more that this stuff becomes so easy. You know, I spend so much time on my chart, you know, and then I try, you know, another way that I learned was like trying to teach people what I knew at the time. That gets you better, you know, you'll be able to start seeing this. So for right now, since it broke out of this zone, you want to look for a retest, right? You want to look for a retest if you want to get in a continuation. So we got this already rejecting off of my predicted TP, right? And this likely created another, this has created another supply zone right here. So we can go ahead and draw this in right around here, right? Which was expected, right? This is supply zone on the 1 hour, right? Now I'm just going to extend this, right? So now, based off of our trading style, where we get break and retest, we know that right here, we can kind of expect for our break. This, we can kind of expect a TP1 to happen around this area. I usually don't trade all the way back to the zone, another level, key level. So I'll just drop it a little short. So that way I'm making sure that I hit my target. So we put it around here and kind of use this level as my breakout price right here. So we'll look for a breakout of 35.48 on oil. And then let me find the targets for this higher target. We already know what this target is because we got a daily zone right here. And we should kind of expect for another target to be around here somewhere. And we will have to go to a higher time frame to get that target. Haven't been here. So we got to go to an even higher. Oh, we got a gap right here. That's going to be interesting. So, wow. So this change of thought process, right? Because we got this huge gap, right? If this breaks this zone, this could really, really fly. You got miles, basically, that this could go to. So oil, looking at this oil setup, right? You see how over here on the 4 hour, when it broke down right here, it never filled this gap. So this gap could get filled off of this move. And let's measure this gap. This is a 483 point gap. That's a good move. Yeah, man, I'm gonna get this, definitely getting on this trade. And you know what you can consider with oil is the fact that it you know, the economy is opening back up, right? And you know, despite what's going on right now at current state, we got our protests and stuff going on. The economy is opening back up. It may have slowed down because of what's happening right now, but just know that if it breaks above this level right here, that it could go, you know. Let me look at this on the daily to try to find a target. Um, see, on the daily, they drew the whole candle, right? Because on the daily, it did push down, right? But it gapped down on the lower time frames, and we can't even find a TP right now because we got to go all the way back to December. We're in 2016 looking for target. And remember, price always repeats itself. So now we can go to our daily to try to find a target. And it looks like, I would say this 37, right? So let me drop this line in. This will be our ultimate target, and we can probably break this down into some smaller TPs. Let me see this on the 4-hour. Wow, haven't been this low since then. Wow, 2016. We can use, I see another target we can use. It's nasty, man. Right here. Here is another target we can use right here. Wick rejection, that's how you find your targets. Look left, find the wick, and that's where you can try to get it to, right? And now let me reset it and get back over here to live action. Oops. 1 hour. Okay, so now we can see, right? These are the two lines that I added, right? Right here and right here. So our ultimate target would be here if it breaks. That's first target, right? And then we have these two targets in between, right? Here. Oops. Jeez. But just one thing that I wanted to kind of point out, you guys saw how I found the targets, right? You look left and you find the rejection. Even if you got to go all the way back some years, that's how you find the targets when you trade in break and retest strategy, right? And any other strategy, like that's how you want to try to find your targets, right? So I'm gonna use TP here, and then the first TP here, and then if it gets up to C, if it gets up to C, this is going to create another supply zone around this area right here. Or it's just going to break out and just fly. Like that is likely to happen if it just breaks out from here, right? So this level and this level is where, if it, and that's why it's, right now we've been in this area of consolidation right here. And the reason why is because if we do break out from this and push up, it's like I told you, it's 400 and something points right here to move back up, you know, and it aligns with the market opening back up, with the economy opening back up, that it'll eventually break this area, because the more people we have on the road, the more demand for oil increases, right? And when the demand for oil increases, that means that the price of oil will increase with it, right? So this all lines up for itself. Maybe it doesn't just, you know, fly from this point, but we will see that we get this broken at some point, right? Maybe it wants to play around in this little area for a little while longer and then break, but this will eventually get broken as the markets, as the economy open back up. So keep that in mind while you're trading oil, right? So here is our entry right here for a break and retest. Let me change the text. So we'll look at 35.47. And let's put this on the top. And you'll look for your targets at 36.09. It's 36.63. And 37.48, right? And if it rejects this, you want to trade it. I would not trade this again. If it doesn't, if it starts to consolidate, right here, right, and it goes sideways, I wouldn't necessarily sell this unless I saw it break back in between and underneath here, right here, to break back into this zone. Just if this is a fake out, right? Say this is a fake out. I would not try to sell it until it broke and held underneath here. So it would need to look like this. I found it. It would need to look like this, right? That's when I'm selling it, right? And it's a possibility that I wouldn't even sell it if it broke underneath here, because if it does, this move I would have to see it. I really would have to see it break below here. I take that back. I would have to see it break below here before I sold it, because this could just be a retracement to push back up. Because if it broke down into here, retested this zone right here, that makes sense. And even if it extended down into this, you know, maybe you could get a quick trade right here, which would give you 39, 40 pips. You can risk that if it does that, because it may be a situation where you might get a wick right here that drops down into this zone, but I wouldn't necessarily hold that. So if I took the sell, I would sell from this area right here, around 34.22. Right here until here, TP at 33.48. And then after that, I wouldn't necessarily, maybe here for TP2, so I'll just add that. But 33.48, 33.48 would be a TP2, right? And let's move these. You know, if it continues, you have this previous sale zone right here that you can use as a TP3, right? And that's if it just keeps moving down, right? And then you can also, this would be a new area to sell from right here. If it broke underneath this zone, you can take another sell from down here and then use it from there. But that's if it breaks back into this consolidation area. I'm honestly looking for the buy. So if I did jump in this trade, I would only probably take TP1, and then I would probably move my stop like all the way near TP1 and just ride it. You know, if it knocked me out, I'm in profit already, so it's okay. So this is what I would trade oil, right? And let me pull you over here, and then I'll send this to y'all. This is what I like for oil. And then another, I'll go over gold too. Let me clean out some of this stuff. Okay, so gold, right? Gold is, so I use channels too. Is it being recorded? So yeah, it's being recorded. Yeah, what's the question, Allison? I'm gonna unmute you.
Yeah, remember Thursday when he was doing the US 30 trade, right? And you said he was waiting for the move on NAS first.
Right.
And then I inbox you about the NAS and US 30 movement, right?
Mm-hmm.
So then I put NAS on my chart because I don't really trade NAS like that. And then I kind of backtest the movement with NAS and US 30. So could you like go it over on the chat so in case someone else, you know, want to know about it?
Okay.
Yeah.
So, okay, yeah, let me hold off on gold. Let me close that out. Close some of this stuff out. My computer processor is on fire right now. I don't know if you can hear all this fan blowing. Some info. So, because the pairs, the indexes, they correlate. And let me give you this link that you can get that's really, really good. Correlation right here. This is my FX book, right? This is a very powerful website, right? So when you want to know how do your pairs move, right? Compared to other pairs, right? Here is the first place you want to come. Let me add in all the indices right quick. I got NAS, I got US 30, I got gold, and I'm even going to add in some G pairs because G pairs are another good pair that I like. And I'll even add in jerk 30, you know, so you can see that too. GA, I like GA, like GN. Where's my other index?
EA is a good pair too. EURUD.
EU? You say
EURUD. EURUD. It moves with GBP AUD sometimes as well.
anybody see S&P on here somewhere? I don't see it. Maybe I'm overlooking it. Anybody see it? 'Cause I am likely overlooking it. US 500. I guess that's it. Yep. Okay. So now we got the pairs we want to look at, right? So here's NAS, here's US 30. So these are the pairs we're going to be comparing the rest of these currencies with, right? So let's scroll down and look at how US 30 moves with NAS 100, right? Here is NAS 100 highlighted in green, right? NAS, of course, moves by itself 100% of the time. US 30 moves in the same direction as NAS 94.1% of the time. S&P 97.6% of the time. Gold 89.6% of the time they're moving with each other, right? If you have one of these as a negative number, like we do here, that means it moves in the opposite direction. 88.2% of the time, right? It's moving in the opposite direction, just as well as these, right? And you can see, like, if you wanted to know, could I trade German 30 with NAS 100, with US 30, with S&P 500? 93% of the time, the same trade that I'm in for US 30, I can be in the same trade with Jer 30, you know. Even the US 200, that's the Russell. Even the UK 100, I can take the same trades that I take with that, right? And you can kind of course, they don't like exactly mirror each other, you know. It won't be a situation where you got one 5-minute candle doing the same thing. You know, sometimes it is, and a lot of times it is, but in most cases, you will get the general sense of the move, right? So US 30, right? And then NAS 100, right? Okay, so this is the 5-minute, right? This is the 5-minute right here. Doesn't look totally or exactly the same, right? But the gist of this is, if you look at these candles on this 15-minute, is this 15? It's 5. This should be 5, right? So the gist of this is, right, we had an impulse, we had a push down, we had a move up. On NAS 100, right? This is that impulse, this is that move down, this is that push back up. Not as aggressive. US 30 is the most aggressive of all of the pairs, right? It moves like, you know, just crazy, right? And even here, right? On NAS 100, on NAS 100, right? Okay, no, this is the impulse right here. This is the impulse, this is the pullback, this is the move back up. US 30s was just reckless, you know. It moved with reckless abandonment, like as people would say, you know. It's extremely volatile, you know. So when you see NAS do a small move, especially S&P 500, you might see that you'll see it did the same type of move, right? S&P right here. Another thing, don't worry about that over there, but it's a cool concept too. I'll teach that another day. Same thing, right? We on the 5-minute chart. It doesn't make the exact same move, but the gist of it is we got an impulse, a retracement, and then another impulse, right? On all three charts, 5 minutes, 5 minutes, 5 minute, impulse pushed up, move right there. Look at it from the 15 minute. This is my 15-minute chart right here. On NAS, we got the impulse down and then another impulse up and just shoot up, right? US 30, 15-minute, looks pretty much the same way, right? Not quite exact, but for the most part, it's doing the same thing, right? Here's the 4-hour, right? The 4-hour on US 30 right here in this corner is just a huge impulse candle, a bullish engulfing candle. What do we have on S&P 500? Huge, impulsive, bullish engulfing candle, engulf all this stuff over here to the left. Same move, right? Go down to NAS 100. What do we have on this same candle? Huge, impulsive move right here. And for us to see NAS right now, NAS is near a supply zone, right? So what do we expect to happen if this rejects it, right? US 30 would reject this rejection zone, right? US 30, though is, this is near, if we measure this on the Fibs, right? If we measure this whole move, we're in the middle of a potential rejection zone, right? On NAS 100, we are near a ceiling at a rejection zone, right? And at S&P 500, guess where we are as well? We're near a supply zone right here, a potential rejection zone. So we can see we have a higher probability now, and that's how we want to trade in probabilities. The probability is telling us we are likely to sell off from here, right? That's what the probability is saying. Not predicting. We're not predicting. We're just looking to see what the higher probability is. And that's what you want to trade in. You want to trade in probabilities. You want to make your decision based off of where's the higher probability of something likely to happen, right? And if things align for it to meet these statistically higher probabilities, that's the way we'll trade, right? And if things play out the way that we want to trade, that's how we would take this. So if I was looking to take a trade, my first logic would be that this would reject this and push back down. With NAS, it's telling us the same thing. With S&P 500, it's telling us the same thing. And with US 30, it's telling us the same thing. But here is our other probability. It could also break this and hold above this and push up. So now we know the two options that we have. We have it break above this area and push up, or we have it reject from this area and continue sideways. And on NAS 100, you can see we're inside a consolidation right here. This will be the first time that it tested this zone. So maybe it fakes out, push back in. And if it does that, then we should see the rest of the indices do the same exact thing. So that's where the correlation between those two happen. And I'm gonna drop this link for the correlation so you can like look at it for any other pair. Correlation, you need to be able to spell it first. That's the correlation, right? And when you want to use this, you can just go into more and add in whatever pairs you want to look at. Those pairs will be across the top, and then the rest of the pairs will be across the bottom, right? I mean, along this left-hand side. And the moral to this, the more negative it is, it moves opposite. The more positive it is, it moves in the same direction. Easy peasy, right? let me read through the question. So that was a good question, Allison. I appreciate you for asking that.
You're welcome. So Nas made the move and the others follow, right?
Yep. Yep.
Okay. Thank you.
And they can actually flip flop between the two, but
Mhm.
for the most part, it's Nas leading. Like sometimes, and that's why that's another reason why Kim on her live sessions, she makes everybody go to Bloomberg, right? Because Bloomberg futures. Let me go to this. Bloomberg future traders are. I don't know futures. I'm going to say that first, right? I don't know futures, but futures tend to be the predecessor. Like they predict more of where the market is going. So that's why she kind of tells you all to look at the futures, right? Because if we see the futures heavily negative or heavily positive, then we can expect a move in that direction that is negative or positive. If we see it hanging around zero or very low positive or low negative numbers, it's likely that we're inside of some consolidation, you know? So yeah, that is that's why she tends to have everybody looking at those at the futures on Bloomberg so we can see them live. And honestly, I've taken some trades off of just paying attention to these numbers and comparing them to the way the chart was moving, and it was a great trade, you know, really, really great trade. So keep this, drop this futures link down here too. Bloomberg futures. So I usually have this on, and I have this up in the background, and I'll have CNBC or Bloomberg on in the background, watching this, paying attention to this, right? Let me see. That was a good. Like I said, that was a really good question, Allison. Is the recording? Yeah, this will be recorded. Alicia, moves are similar. Do they move around the same time each day? Or does the move have, yep. All the pairs move generally around the same time. Let me show you something. And let me look at S&P. I'll show you something on here. Let's look at the hourly. So there are a couple times when these pairs move during the day, right? The main time is at London and US. Those when the bigger moves typically happen. Then you have, you know, sometimes during the London, not London, but the Tokyo, Sydney session, you might get a move after hours, right? After around that same time. So that's why you want to pay attention to volume. Like, and that kind of goes into another question that, who asked that question? Jeff talked about. What's up, Jeff? What's going on, man? So volume. Volume measures the number of people or number of traders within a given candle, right? So at this candle right here, I hope y'all got y'all pen and pads out for this, right? Please tell me you got them out. Drop a 777 in the chat to let me know you got your pen and pad out right now. So I want to make sure, because a lot of people keep asking for this, right? Okay. And Aaron, bro, you will eventually be teaching this, because you've been on like 89 times when I talked about this. So I'm expecting for you to be able to teach this, right? All right. All right. So volume. Each candle is, of course, we know that it represents a given time frame, right? And let's look at this bullish engulfing candle, right? So for this particular time frame, volume says that X number of people put in orders during that hour, right? So we always consider price first, right? We always have to consider price. Price is king, right? Price is everything, right? But as an addition to that, we also want to know when are people coming to the store, because we can set everything in Walmart can be on sale, right? We can set, what was the advertisement? Walmart has low prices. Hold on one second. Walmart has low prices, right? And we can set everything we want to on sale in Walmart, right? But we still have to have people to come into Walmart to buy it, right? To buy it, right? And that's what volume measures. Volume measures the number of people coming into the store to buy, right? Or sell, right? You know, and that explains, you know, why you see the market impulse and move at certain times, because you need a large order or you need a large number of people to come in the market. So if we look at volume, and I like to just kind of get a general idea of where it is when it's not moving, right? So when it's not moving, if I look at the volume bars, I would say that, and I'm just eyeballing it, right? I would say when it's not moving, it's moving kind of slow. The volume hangs around here, and I'll highlight this in a weird color that I don't normally use. Let's do this fuchsia, whatever this is. I don't know colors like that. And then let's make this a thicker line right here, right? Oops, I didn't take my color. Right? So here, overall, right? When it's not really moving, the volume kind of sits around here, right? But anytime you see volume spike, right? Like right here, like right here, like right here, right here, even right here, right here, right here. And we'll review those areas in particular, right? So let's go ahead and mark those areas off. Here is the zone. Here is a spike right here. Here is another spike right here. Here is a spike right here. Let me go ahead and add that one too. There's a spike right here. That was cool. That played out like I wanted to. Here is another spike right here. And what I want you to do when you look at this is go back and review where you see this, right? So on these candles, right? On these candles right here, 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 and over here. Okay, where this volume comes into play and where it's important to consider it, right? Right now, the volume was low prior to this. And then we got near this zone, right? There is a zone right here. I don't have it boxed off, but there is a zone around this area, right? I don't have it marked up. And I actually want you to see it without it being totally marked up, right? Because we're near a zone, right? We're near a zone, and we get a volume spike. In order for us to have a reversal or a breakout, this would be a breakout right here. This would be a reversal right here, right? In order for us to have one of those, also, hold on, here is another example of a reversal over here, down here, right? Another example of a reversal right here and a breakout right here. We have to have new people in the market in order to do that, right? Anytime you see a reversal and we're near a zone and we see volume, know that the market is going to either shift and change directions, or it's going to break and continue in the direction that it was going in, right? Always happens. You have to, in order for that to happen, you can't get a bullish engulfing candle, or this is, I think what we call this a harami right here, a harami pattern, without having volume, right? Anytime you see something like this, the market's just going down, going down, going down. You can only stop and change the directions if you have volume, right? And here you have the volume heavy, heavy, heavy. This is during New York session, right? This is during New York session. What happens in New York session? The majority of the money that's made in the market is made during the New York and London cross, right? That's in between 8 a.m. and noon. 8 a.m. New York opens, noon London closes. So the majority of the money being made is made between those two time frames, right? Of course, there's money made during the rest of the session, but the majority of the money is made right there. So we expect for volume to be extremely high during that time because we have more retail traders trading. We have more hedge funds trading. We have more banks trading. We have more private companies trading. And when we get all of that combined near a zone, then we know we can expect for the moves to happen. This can happen on a 5 minute. This can happen on a 1 minute or 1 second chart. This can happen on a daily. All of this shows the same activity, right? Another way to look at this, right, is an auctioneer, right? An auctioneer, that person has price. He maintains control of price, right? So he's 75, 100, whatever, right? And if the market is going to go up, I need somebody to bid on a higher price. I need to have an influx of bidders, right? So imagine the people in the audience that are bidding on the prices. They are the ones that are applying the volume. Like the more people that are bidding, the price to go up, you know. Now we at 75, 85, 95, 100, all right, 75, whatever, 125, 150. The more people introduce themselves into the bid or the auction, the more price goes up. So that's how we have that correlation, right? I have a set price. I have price moving down, and down here is a zone, right? So we know this is the lowest it could go, or it's going to break out. But we had the people to come into the market, push the market up. The next time I see volume come into the market will imply whether we have another continuation or another breakout, right? Here is a rejection right here. It rejected. It found some support area, supply zone up here. And then new players came into the market. What do we got right here? We got volume. We got, it was, we can see the volume started to like slow down from here. Started going, let me make this red. We can see that the volume like started, it was high, then it started to slow, right? Then right when it got back around like the average of everybody, you got a spike up again right here. First rejection. We got the actual spike down and move down. That triggered this move back down, right? And let's look at it on the 15 minute. same candle on the 15-minute gives you a better entry. Now you see the volume over here is rejection. We're near this supply zone. Now I see the first candle to reject was right around here. First time that it kind of
Good question, Corey.
Yep.
All right. So the zones, the supply zones, demand zones, what you drew up, correct?
Mm-hmm.
All right. Also another question. Now, I know some indicators, they have a lag time. So while you're trading, it's live. Like, do you see, is this the volume bars, is it showing as it happens or it happens?
All of it's lagging, right? So all indicators are lagging. So the way you want to use this is, because I don't enter on that same candle. I wait for the next candle. So if I see, okay, is the volume's tailored off, I got a new spike of volume, right? And this candle would have been my first signal, right?
Okay.
So if I'm comfortable with this, seeing this volume and this rejection, I already got signs that this could be rejecting, right?
Mm-hmm.
I wait until I get the candle that has either the next candle or following candles of that, and I take the move from that direction. Just like this, right? Just like this example right here. You see how this candle was the first candle to imply, really the first candle to imply that this was going back up was right here, right over here. This volume shot up right here. So we were going down. We were going down on the volume from this spike where this high is right here. It started to go down, down, down. Then the next time we finally went back under this line, the next time that we had volume spike again was on this candle. So this is saying, what this is saying is that price is moving back down, and it's moving back down. We found an area of support, an area of support right here. Then as we keep going, here's another confirmation, right? Volume's low, right? Volume's low from here, from this candle, right? Then as we go on, we get a spike right here. Along with this spike, we get a huge wick rejection. And that's another thing, when you see volume and you get one of these wicks that are almost longer than the body or longer than the body, a pin bar, those add on to the confirmation, right? That this is likely to push back up. Do I enter on this candle? Possibly. There are a couple of ways you can enter on this candle, right? Enter with this, right? You could wait until you get a swing up, then a push down, and enter like this one did. So we got the rejection. It pushed around and played around. It pushed up, then dropped back down, and I can enter in right here, right? Or you can take a somewhat more aggressive approach, and you can try a concept like this, where I put an entry, I look for my entry right here at the body of the candle that signal the market is reversing. I put a buy, stop, or I do a market execution right here. So that way, when the market pushes down and then pushes back up, you'll get pulled into the order right there. That's one way to enter. The next way you can enter it is you take another approach, right? You put the candle, put an order, a buy stop inside of this wick right here. And then you just say, if it wicks me in from down here, I get pulled in at some point. You can use a buy stop, or you can use market execution. In this case, a buy stop would have worked absolutely fine. And what this does is, oh, I'm sorry, before I do that, the third way to enter this is you enter at a break. third way to enter this is you enter at the break of the candle, right? Or the break of a zone that's near there, right? And you would have gotten in and a good trade on any one of these, right? Any one of these entries, right? I look for my entries like this more so than I do here, because I like to try to get all the pips I can. Because sometimes when we take our trades, right, we enter in on the break, it puts you in drawdown if you enter in right here at the break, right? But trading the break, there's pros and cons to everything, right? Because this could get you in a trade that absolutely just keeps going down, right? But it puts you closer to what the stop loss should probably be, right? If I'm gonna get in a break, right, my stop loss should probably be under here, right? And if I'm gonna get in this entry, my stop loss should probably be right around here. It kind of gives you a cleaner stop loss, right? I don't have to set my stop loss as large because I'm already near as low as it should probably go, right? So I don't have to set my, if I get in on a trade like this, I don't have to set what would be, if I traded a break, my stop loss should be under here, right? That's a 30-point stop loss, you know, and if I'm trading US 30 and I'm putting my stop loss in the same place, that could be 120 pips, right? You never know with US 30, right? So I wouldn't want to have my stop loss that large, right? So I'm going to look for an entry where if I'm entering in down here and I'm putting my stop loss in the same place, now in this case, my stop loss is only 11 pips, right? Or at the most, I'm at right here at 20 pips. So it lessens my loss, right? It lessens the risk that I take, right? Compared to using a stop loss on a breakout, that would be all the way down here. That's one of the pros of entering like this. The con of entering like this is you never actually know if this is guaranteed not to continue and to reverse. So, you know, you just have to take that into consideration. The pros of trading a breakout is when you trade a breakout, it may never retest, or it may take a while for it to retest, and you want to get the move. If you miss this part and you want to get into the move, trading a breakout will let you get into the actual impulse of the move. So like I said, it's pros and cons between the two, right? And I typically look for, both of these trades. So I'll try to get in right down here and in right here on both of the trades. So I can take advantage of both. So I twin trade, right? So my first order will go in down here, or try to go in down here. Then I'll have another order right here, or that I enter in up here. And sometimes when it hit TP1, I'm already up 100 pips or 200 pips, you know? So I might close out my whole trade. I'm done, you know? I don't have to do nothing else after that, you know, because I'm already good. And if it goes to TP1 or TP2, I might leave an order in, a little small order in, a point 1, you know, or 0.05, you know, just to see if I can get some extra points, you know. But, you know, just to kind of see, you know, just to kind of see where it goes, you know. So you got options at that point. But when you trade in breakouts will hit TP1 between 80 to 90% of the time, right? And if I get in at the lowest point of when the actual breakout begins, that means that I can basically get in at the absolute beginning of the breakout. And that goes into to wave patterns. That gets me into the 0 to 1 move of a wave pattern. I'll go over that on another session. So, so that's what you kind of want to look at when you're looking at your entries. Let me check and see if there's any more questions.
Appreciate that.
No problem. On Thursday, it was selling all day. NAS was selling all day, and US 30 was buying. Let's look at Thursday. Thursday. What was Thursday's date? Thursday was the 28th. So Thursday was the 28th. And NAS on Thursday. NAS was selling. It sold at the open. It sold off around here, but for the most part, it's just kind of moving up. Let's look at US 30 on the 28th. It was kind of pretty much doing the same thing. It was pretty much doing the same thing. So this is the 28th during this time right here to here. All of this is the 28th right here. And then this is NAS. This is the 28th right here between this time right here. And like I said, it pretty much did the same thing. It just wasn't as clean. That's with the two. You see it kind of like was sideways a little bit, then it pushed up, then it dropped, you know. NAS 100 sideways a little bit, pushed up, then it dropped, you know. So overall, it did the same thing. It just wasn't as clean as it normally is. So, and then NAS was reacting to some zones where NAS was reacting to some zones from on its chart, which kind of triggered some of this, you know, movement to look a little different, you know, because US 30 was responding mostly to this zone on the top. US 30 was responding to this zone and this zone right here. So it was stuck in between these two zones. So you didn't have the same major reaction that you were having with NAS, because NAS zones were a little off compared to US 30. Do I place your YouTube videos on YouTube? Yeah, I do place them on YouTube, and they're private, so you have to have the link to get to see them, so that everybody can't just be juicing up off of my stuff, you know. But I got a call to get on in about 10 minutes where I'm going to be going over how to use MetaTrader and TradingView. It's for the mentorship group. I will drop the link for you guys if you guys want to get on. I won't be talking about trading stuff, actually marking up charts and all that kind of stuff. I'll be more so talking about how to use the platform. You know, what do each of these different tools mean up here, here, how to save and publish and screenshot, and these tools over here, and then going into MetaTrader 4 and doing the same thing. Aaron, did you grab the YouTube for me? I think Aaron said he was
going live, bro. I've been doing my hair.
Okay, let me go to it. YouTube. Wait a minute. What? What's going on? Okay, Rob. I'm keep reading. Hey, I'm about to make you a good trader, bro. Gotta get you to do this, man. So here is the channel. It's only showing the videos that I made public, but then I have other videos that are private that I have thrown on here that you guys can see too. So here is that. Oops, my bad. That was to Robert. So you got it directly. Here it is to everybody else. And if you go ahead and you can go ahead and subscribe, and then just check back on the because you won't be able to see it because it's private. Check back with me if you're on this session right now. Hit me up in about 4 hours or sometime tonight, and then I can drop you the link to this video so that you can watch it from YouTube, and you'll have all this, okay? I would love to answer some more questions, but I gotta jump on this next call, and I will holler at y'all. Make sure y'all reach out to me if you want this video. If you guys want the video, and I can send it to you guys. And yeah, that's it, man. It'll be posted up soon. Okay.
Thank you, Corey.
If you're jumping on the call for this next one, I'm gonna be, and if you're in Kim mentorship, if you hit me up on Telegram, if you got Telegram, I'll drop that link to that too. And then, but I'm only gonna drop that to select people. If you reach back out to me after this session and say you want to get on that, because this is specifically for those users. But if you're inside of Kim's mentorship group, you'll get the link here shortly. I'm about to drop a new link for this, okay? All right. You guys have a good day. Good luck, have a good week. And, you know, let's get this money.
You too, bro. Thanks.
All right. Peace out.